Okay, everybody, it's me, Gregory Mannarino. It is Monday, May 16, 2022, people. As I said yesterday in my Markets A Look Ahead, this is a big week for this market. We are going to know, in my opinion, whether or not this rout that this market has been experienced now for the past few months is going to get worse, or is this about to turn around? Look, I want a lot of you to understand something here. And, I go through my emails, I read the comments and the questions and everything else. Forget about any connection whatsoever between the economy and the stock market. I've covered this literally a million times over the years. There's no connection here. Zero. So understanding that, the stock market is completely independent of what the economy is doing because, again, I wrote a whole article about this and I posted it in my free newsletter yesterday. If you haven't subscribed yet, please subscribe to my free newsletter. Link in the description of this video. One thing and one thing only is driving this stock market, and that is action in the debt market. Period. There's nothing else. I've covered this again with regard to, companies' earnings, forward guidance, PE ratios, and the economy itself. It's just completely irrelevant. And this phenomenon has clearly, at least in my view, caused the stock market to become nothing but a derivative as to the action in the debt market, meaning the stock market derives value from debt market action, period. Now, with that said, I want you to understand, forget looking at the freaking freak show stock market. Really, it's the truth. It's the debt market, more specifically the 10-year yield. Now, let's look over at the 10-year yield this morning. We're at 2.9. Again, a tremendous move recently with regard to the 10-year yield. It has come down substantially. And the debt market, again, remains stable until we get a sell-off here and rates spike. 10-year yield, 3, bang, 3.25, bang, 3.5, bang, 4, bang, rapidly, bang, 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 bang. That is going to tell us, okay, guess what? The debt market is now unstable and the stock market is going to melt down. A move lower. I've covered this a million times again, but it just seems like people need to keep hearing this. The move down in the debt market, in the 10-year yield here, is just a safety trade or a fear trade. That doesn't mean that the debt market is unstable. It is stable. And that means the driver of the market, is stable. And the stock market will eventually turn around. So with that said, as I covered yesterday, and I'll cover it briefly right now, we're really at a moment here with regard to the S&P 500. Well, we're going to see. We're going to see. As a matter of fact, we need to see something today. Forget about even tomorrow or the next day. Right now, stock futures are about flat. 10-year yield 2.90. The comparative strength of the dollar, or the relative strength of the dollar, is slightly lower. Crude oil, market's loving it here. It's going to go a lot higher. You got WTI crude about $109, $110 a barrel. So looking at the setup for the market, 10-year yield looking okay. Weaker dollar, market loves that. And crude oil, pretty high. The setup is not bad. The market needs to rally today, okay, and for us to know at least that we're on the right track at getting out of this route this market has been in since January. You understand? I think you do. The ideal situation, I've covered it, but I'll tell you, it would be a rally today, a rally tomorrow as well, followed by some kind of a pullback a little bit. Because understand, you know how this works. Assets go up, they drop, they establish a floor, and they go higher. That's the way it works. So that's why we need to see a rally. If this market today or tomorrow gives back all the gains that we made on Friday, well, then we know there's a lot more for this market to fall. I showed you a chart recently with 3 support levels. We bounced off support Friday. Well, let's see where this goes. Also, people realize that the crisis to crisis to crisis guarantees that central banks, none more so than the Fed, will continue to inflate, regardless of what they have done. Do you think it's any coincidence? Honestly, let's think about this, that the Federal Reserve is now raising the federal funds rate incrementally. Meanwhile, we went again from the COVID crisis, for which they shut the entire global economy down, and the market still went up. Okay, remember my call on that? Get long COVID? It was one of the best calls I've ever made. Well, everyone said, oh, this is it. Market's going down. It's going to crash. I was like, no, it's not going to crash. It's going to go up. And it actually did. I know that sounds completely contrary to what most people were, well, almost everyone was saying. But it just makes sense to me that we're going to pump everything full of easy money. And with regard to this inflationary environment, which is out of control, realize the Fed has no intention at all to really slow inflation. As a matter of fact, they're going out of their way to create more inflation. No one's being told this. The mainstream propaganda ministries will not allow you to know that what the Fed is doing right now is guarantees more inflation. Not lower inflation, but more. So you can count on energy prices continuing to soar out of control, food prices out of control. Your cost of living is going to balloon a lot more than what you're seeing already. So I want you all to be ready for that. With regard to global debt, how many of you, with the show of hands, because I can see you, believe that global debt is going to miraculously start to shrink? Do you believe that's true? No. I know that you don't believe that. Global debt is going to double from here very rapidly. And that is, again, central banks, none more so than this institution. See my hat? Okay. They're in a race to the bottom. They want to destroy their currencies by design to allow a new system to be installed globally. So I think we're on the same page with this here. Completely digital system, fiat, backed by nothing. Again, central banks' power, all central banks' power resides in one thing and one thing only: their ability to issue more debt in the form of fiat currencies. These fiat bills that they print or add to a digital screen, these are units of debt. They are not units of wealth. And the more debt any central bank can issue, the stronger they become, not the weaker. You understand that? That was the big lie that was being sold during the Trump administration. Oh, there was all those, I don't know how they were, QAnons out here. Oh, Trump is trying to he's going to destroy the Fed by causing them to continue to print. No, it was absolutely the opposite. The more debt that a central bank can issue, the stronger they become. This is why under the last several presidents, we've seen the Federal Reserve become by far the strongest organization on the planet, backed by the United States military. It's full arsenal. All right. So with that said, that's where we stand today, this morning. We must see a rally today. If the market does not rally today, more than likely, we're going to see more losses here, and we'll discuss this later. So a big day in my view, a big week. We got earnings today from some big companies. We got Walmart, we got Target, we got Home Depot. We're going to see how badly people are burying themselves in more debt. I mean, look what we have. Again, consumer debt, household debt, personal debt out of control. We have members of the middle class, whoever's left of them, tapping into savings accounts just to make ends meet. Our economy is in collapse globally, and it's shrinking, okay? But, you're being told everything is fantastic. It's tremendous. It's perfect. It's beautiful. It couldn't be better. And it's just all a lie, too. Yes, it couldn't be better for the rich and the well-off. They're killing it. But everybody else, not so much. And again, as you well know, the middle class is being exterminated. And this inflationary environment is part of it. To get rid of these people, to create this two-tier society, go back to a feudal system with overlords and serfs below that. Again, like I said yesterday, our forefathers, they were quite quite the men who built this country here. If it were not for them, we would be living under the rulership of kings and queens. But, we're going back to that very rapidly. Unfortunately, we let this happen. Um, and we can expect this to get a lot worse as central banks, none more so than the Fed, the puppet government we have right now, which we have had for a long time. Again, central banks are the government. They are the government of the world, and everything else is just a shit show. It's all just a way to keep people locked into believing that there's some kind of a system that works for them. It's just nothing. It's just fake. All right, like I said, let's see where this goes today. Very interesting stuff. I'm looking forward to seeing how this day plays out, and we'll cover it all later, and we'll see where we're at. I don't know about you, but I'm pretty excited about it. I'll see you later.